Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. As the fizz of the New Year party settle down, the end of December slumber will give rise to volatility, especially since January is an eventful month. Many things to look forward to this month and this year. We are starting this year with many narratives carried forward from the previous year, and these will keep shifting because there are various googlies that will be thrown, be it from the Trump side, geopolitics, or the monetary policy. Good morning, JK, and a very happy New Year to you and our listeners. How are you expecting a start to this year?
Good morning, Swaraj. Happy New Year to you and Happy New Year to all our associates and listeners. Yes, as you said, we are carrying forward quite a bit of themes from 2024 into the new year. And definitely, we have carried forward in the first trading day yesterday, as far as India is concerned. See, the rupee made another new closing low against the USD at 85.64. And also, if you look at the FI number, again, they were negative. We had almost 1.2 billion of negative flow as far as FI is concerned. What is concerning is that we had outflow from both equities and the bonds as well. Now, see, in 2024, rupee has weakened by about 2.8%. And so despite that, it doesn't look like, we are seeing any immediate reversal or even a meaningful correction for the rupee because we have quite a few large macros which are against the INR. First, if you look at the flow pattern for the rupee, last year we had as much as 41 billion of inflows, and this year it is almost half of that. And importantly, we had negative flow as far as this I'm talking about the financial year 24-25. There's been a negative flow of FIS for the equities, and but for the large inflow for the bonds, which was mainly due to our bonds being included in the global index, it would have been even worse. And as far as the calendar year is concerned, once again, it's a very negligible flow of about 123 million for equities, whereas for the bonds, it is about 19 billion. So we are in a very subdued position as far as the FI flows are concerned. And if you look at the RBI bulletin, latest bulletin published on December 3rd week, the net FDI flow also is lower at 2.1 billion for the 7 months starting from April 24 compared to 7.7 billion a year ago. So another source of flow that is not very encouraging. The data published last week also showed that our external debt has risen to 711 billion, or 4.3%, compared to the end of June. Almost 29 billion increase, whereas our reserves, as we have also pointed out in our earlier podcasts, have hit below 600 billion, including the forward position. So we are again seeing a situation of higher debt, lower flows and lower reserves. And finally, maybe you already know that our trade deficit has hit an all-time high of 37 billion in the month of November. So all in all, the situation doesn't make a good macro setup for the rupee, and I'm not surprised that we have started on a weakening note, and this should continue. And the global setup is not supportive either. We have hit a new high in USD CNY at 7.33 today morning. Although the Chinese central bank fixing almost unchanged the central rate has led to some pullback in the yuan but the trend there is also very clearly upside. Dollar index itself, which had one of the largest rise in the year 2014 after the year of 2015. We should be not really looking at change in that trend because the major component of the dollar index, that is the euro, is looking weak. Looking for more rate cuts in ECB than in the US, and the economy in Europe itself not encouraging. However, there were some voices from Europe who are concerned about the weakness in the euro, which may prevent ECB from going for larger rate cuts, and also the recent rise in the natural gas prices, which, along with a severe winter in Europe, may push up their inflation, and this can be something that can prevent their rates from going too low immediately. But that said, overall dollar is looking quite strong. Trend-wise, it is strong, and that is not helping the rupee as well. Therefore, I am seeing the rupee further weakening. To start with, and of course, where we stop is not easy to predict, because we have to see how the dollar behaves after the Trump administration takes over, and if they do talk down the dollar because of the impact of higher dollar on their deficits, and that can actually offset their what they are looking for to from the tariffs, then the dollar might see some decent sized correction, but that can help rupee only if it results in a larger flow to the Indian market, and of course that also can happen only if the Fed policy also loosens further. So there are various preconditions that would be required for rupee to improve itself. And at the moment, the conditions are not very conducive for the rupee to strengthen. Actually, they are conducive for more weakness. And immediately, the resistance is at 85.80, and that should be broken in the near future, setting up a test of 86 and 86.50 in this month itself. That is what I'm expecting. Dollar index, of course, 110 becomes a attraction for this month. However, we should look for some sort of a pullback, at least in the dollar index, before the Trump administration takes over. So, all in all, as I said, we are continuing with the trend that was observed for most of the year 2024. Although we can see some sort of interim corrections in the same. Thank you.
Thank you, JK. And just quickly summarizing, especially for the rupee theme which you covered, because rupee continues to remain weak. Even yesterday, we started the year with some weakness, but the flows remain a cause of concern. Though last year we received strong flows on account of debt, equity and FDI flows were very tepid. So that's something even investors will be tracking closely. So higher debt, lower flows, and lower growth. That's not painting a good picture for the rupee, as you mentioned. Apart from that, we also have the dollar CNH, which hit a new cycle high of 7.33, along with the dollar index, which had a strong closing in 2024. This will cause some additional problems for the rupee. And the incoming Trump administration will also guide the trend of the dollar, and it's something investors will be tracking closely. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.